Wow, I haven't seen market panic like this for about 14 years. There's two different ways that I see this resolving in the next week. Hi, it's Doc Severson with ReadySetTrade. Welcome to today's Market Minute for Monday, the 13th of June. Let's begin by seeing what's happened over the last 3 days. We've dropped from about 4,200 on the S&P 500 down to this morning 3,750, so a 450 point drop off of the recent highs. Here's the Dow Jones Industrials with a drop of about 2,800 points to the downside, and the NASDAQ 100 dropping about 1,500 points. Let's go back to the S&P 500 futures and talk about what I see for the two different possibilities going forward. Here's the weekly chart on the S&P 500 futures. First off, nobody knows what the future is going to be. So I don't care what you're reading on Twitter or Facebook, Reddit, whatever. Nobody knows what's going to happen tomorrow in the markets. But what we can do is we can read clues into the market. Now, the first clue that I have from this is there is so much energy wound up into this market. We are not going to go range bound. So what I do not expect to see is the market going range bound in the near future. There is so much fear in this market, it's ready to explode one way or the other. So how can we determine whether or not this market is going to continue to go to the downside, or whether we might actually see a surprising upside bounce? I'm going to go back to the daily chart here for a second, because this is a level that we need to watch very carefully. You can see the low from last month in May, and that level is about 3807. If we see a close below that level this week on the daily chart, so a closing level below there, then chances are that we will probably continue lower into this week and beyond. I'm going out to the weekly chart now. Then we'll probably see support come in somewhere around this area, which is going to be bounded by 3,500 to 3,400. If we have further disappointment in the markets this week, or more uncertainty in the markets this week, then we may see a very quick move from current levels down to somewhere between 3,400 to 3,500. Now, I'm basing this upon the fib retracements, the confluence of that versus the swing test over here. And there's also a lot of activity at this level on the volume profile. So to me, this is the next level of support, if support does exist in a bear market. Now, to me, this is where I think everybody thinks that the price is going to end up by next week, is probably lower, because everybody is a bear right now. It's become very fashionable to become bearish on the market. So this is why I'm going to consider a second possibility, which is that we may get a bounce from this level, especially if we see an undercut of the May lows, which we have right now, and a close well above there. So if we end up printing a hammer candlestick in the next day or two, like this, where the price goes well lower and closes much higher on the day, then we might start to see price actually go back up, especially if certainty comes back into the market on Wednesday's FOMC meeting. Just for a historical perspective, I'm going to go back to 2008. This is very similar to what happened in March of 2008. This is where Bear Stearns finally went out of business, which was a big shock to the market. Notice that we had an undercut of the January lows here in March, an undercut and a much higher close from there. This created enough excess negativity to allow for a 2-month recovery rally into mid-May of 2008. Now from there, this created a much larger time frame, lower high on the monthly chart, and really spelled the beginning of the end for the market in 2008. So in summary, everybody is bearish right now. Sentiment is absolutely horrible. The path of least resistance is certainly to the downside. This is the obvious direction where the market probably will go. However, I do want you to be aware of the possibility that if we do get a higher close from here and this wonderful undercut, We've seen that produce some amazing relief rallies, which is in the direction that nobody is leaning right now. And so that may go on for another month or two and would surprise the majority of market participants. I think we're going to have to remain flexible to stay alive over the course of the next couple of weeks based on how much energy and fear are in these markets. That's it for today's Market Minute. We'll see you in the next one. Thanks for listening.